Welcome back to Strongman Personal Finance, everybody. In this paid video, Strongman Personal Finance, who is a shirtless man sitting in his garage, is going to teach you how to become a successful YouTube channel and grow a successful business. Because there is no better role model to grow on YouTube than Strongman Personal Finance. Welcome back, everybody. So this person had an interesting question. You didn't want to hear about stunks. What's better, Tesla or Palantir? He wants to actually have me talk about how to start a YouTube business. Well, it's actually very simple. Very, very simple. Here's what you do. You start a YouTube channel and you start uploading content. Now, when you start as a YouTuber, you're going to be nervous. You're not going to know what to do. I remember when I first started as a YouTuber, I was really rigid in my videos and I didn't really know how to edit. I didn't really know how to record. I didn't really know anything. And over time, by posting videos and perfecting my content, which this is a perfected, polished thing. You may not think so, but it is. But the more you do it, the better that you get. Go watch my oldest videos, which are annoying to find because YouTube is so stupid that they got rid of the filter on the old videos. But go watch my oldest videos. They were horribly edited. The thumbnails were god awful. And I was very just stilted and not very relaxed and fluid. But by doing a bunch of YouTube videos, I learned how to become a better YouTuber. So the first thing you have to do is start posting content. Okay, but you need to know what you want to do. Do you want to be a high quality, highly edited YouTube channel? Well, that comes with a lot of things. That comes with a lot of time commitment, and that comes with a lot of expenses. Do you know what my expenses are as a YouTuber? Electricity. Okay, I bought this mic for like $40. I bought this camera for like, I don't know, $30-$40, something like that. I bought this desk. I bought these monitors that I'm looking at right now, this keyboard, and a computer. But my expenses are extremely, extremely low. I am a very, very profitable YouTube business. I don't pay for I've done it before, but I generally don't pay for thumbnails. And if I do, it's like $5 or $10 at the most. I edit my own videos when I actually do edit them, which is very rare. I usually just go live and talk trash. And I don't spend money on anything. That's a type of channel that I have. My goal is to not be the biggest YouTuber in the world. It's to emulate Aaron Clary, basically. His type of channel, low quality, but high, like people like him, but his videos are low quality. Kind of like mine. I don't wear a shirt. My camera's not the best. My mic isn't the best. I would not call my videos high quality videos. But I like to make a lot of content and just ramble and talk about whatever I want to do. I don't script my videos. I just go. That type of YouTube channel can succeed, but I think to really succeed, you got to have a lot of money. You got to pay for an editor. Well, I mean, you got to spend a lot of money. It doesn't mean you have a lot of money. You got to pay for an editor. You got to pay for thumbnails. You got to pay all sorts of different monies to grow on YouTube. But when you first start, just kind of figure out what you want to do. Okay, just get on there and make some content. You're going to suck. You're going to be scared. Your thumbnails are going to be trash. But over time, you'll get better. And then if you have to restart and do another channel once you learn how to do it, then do so. But start the channel. Start posting content. And if it sucks, okay. Now, when you first start posting, you're probably not going to get many views, okay? A lot of people, people think everybody on YouTube just grows massively and they come out of nowhere and suddenly they have 500 billion trillion subscribers. My first year, I grew extremely slow. My thumbnails were horrible. My content, I would say, was not what it is now. It took me a long time. I was constantly posting, constantly doing this, constantly doing that. And it took me forever to get monetized. And there were plenty of opportunities where I could have quit doing YouTube videos. But I always knew if I kept at it, I would get 1,000 subscribers. And I would get monetized, and all that work would pay off. But you got to spend money up front. You got to buy a camera. Like I said, it depends on what type of channel you want to be. You got to get a microphone. You got to get a computer. You have to have all the crap. Then you can start making content. And then eventually you get to the point where if you're consistent and you keep experimenting and find what works best for you, you'll eventually get 1,000 subscribers. And then you start getting paid, okay? Now, it's not a lot of money. Okay, like my ad revenue has ranged from $300 a month to one time I got like $2,000 in a month. But it's very variable, and on average, like you can't live off ad revenue. So when it gets to be the business aspect of YouTube, so let's transition. So let's assume you start your channel, you figure out what you want to be. You're consistent, you improve, you get better over time. You're not a bussy and you don't quit halfway through before you get 1,000 subscribers. Now you're starting to get some traction. So the question becomes, what do you do after that? How do you go forward once you have 1,000 subscribers? Well, now that you're making AdSense, which is ad revenue, there's also other ways you can make money. And you could do this before. But when you have like 10 subscribers, like I don't think you should focus on having a business. I think you should focus on growing your channel. And then once your channel gets to a certain size, then you could bring in the business aspect. But I mean, you do whatever you want. But me, I didn't focus on a business until I grew my channel and started getting monetized. And even then, I kind of waited for a couple thousand subscribers. But when it comes to starting a business on YouTube, you have to ask yourself, what are you going to provide to your audience? Are you going to provide additional services outside of YouTube? Or are you going to be entirely YouTube-centric? There's a lot of people that are 100% YouTube-centric. They have their, it's not a Patreon, but it's like the YouTube membership. They have that on YouTube. They have, they get a lot of AdSense. They do a lot of sponsorships. All of that stuff, they stay on YouTube. But there's other YouTubers that try to bring you outside of YouTube. Now, I'm kind of the one that does all of it. I try to bring people outside YouTube. Oh, you want me to teach you accounting? Okay, you pay me and we'll meet up. But you can make a lot of money just staying on YouTube. Now, you get AdSense, okay? You can do sponsorships, which for me, it's been a hit or miss thing. I've had a couple of sponsorships, but when it comes to sponsors, you got to be careful. You don't want to sponsor absolute scams. You don't want to be a clown sponsor, okay? If you sponsor clowns, you're a sellout and you're a freaking loser. Don't pump penny stocks. Don't pump crypto or NFTs. Don't be a loser. Don't get greedy, okay? And be careful what kind of affiliate links you have. Okay, let's say you want affiliate links. Don't put clown stuff down there like, I don't know, some loser's options trading course. You don't want that. Okay, well, if you do, whatever. I mean, that is a business. You would make more money than I make on YouTube if you did that kind of stuff. But it makes you a dirty freaking sellout. So don't do that. But sponsorships. So there are agencies out there, and I've actually worked with one before, where they will hook you up with a sponsor. They're kind of like the intermediary. And, I'm sure eventually you get to the point where you're probably paying them a fee or they're getting a cut or something like that. But I would recommend you do that, but also have the option of working directly with sponsors. I've actually had most of my sponsorships have been direct sponsorships with the person. And I actually had a lawyer, a friend, look at my look at a contract that I wrote and made sure it matched. So I made sure when I had a sponsorship directly with somebody, I had a contract in place. We both signed it, blah, 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 blah. But that's definitely something you can do. And contracts can be lucrative. I mean, like I've made decent amounts of money with contracts, okay? But that really comes, contract sponsors. That really comes later on. So we talked about AdSense. We talked about sponsors. You can do channel memberships. I'm not against it, but it's really all about like what kind of effort you want to put into it. If you just want a way for people to donate to you, you can do the channel memberships on YouTube, or you can bring them outside to Patreon. I would honestly recommend you move people over to Patreon, because if YouTube ever deletes you, you still have your Patreon. If you have a channel membership and everything's on YouTube and YouTube deletes you, all your income's gone. But if you want sponsors or you want patrons, I would say go to Patreon or find some other medium to actually get sponsored or get patronized by people, okay? There's nothing better than being patronized. So there's that aspect. Like I said, you can do affiliate links, but don't be a clown about it. Basically, watch a bunch of different YouTubers, see what they advertise, and then look in the descriptions of their videos and kind of get an idea of what you think works for you. So that's all one side of the business. Now, if you want to bring people outside of YouTube, you need to have some kind of skill, okay? You can't just be a clown and a scammer and be like, oh, well, I can tell you how to pick stocks in 10x in 5 seconds, bro, and trade options. Buy my code, bro. You got to provide some kind of value, at least in my opinion. So what I do is, you know this because you paid for this video, I have people pay. And it's, look exactly what I did. It's the easiest thing. I wrote a Word document, I uploaded it to Dropbox, and I linked my PayPal, my Venmo, and Cash App. And if you want a video, you pay me $50. I check my phone, I see a deposit, and then I make a video. Now you got to track your business. Okay, you have to have some kind of tracking system. I have an Excel sheet with literally every person that has paid me for a dedicated video. I have their name, I have the amount of money, I have their email address, I have their social. I'm just kidding, I don't have that. But I have every single, I have the data I need, and I can sort it based on the date that they paid. So I'm actually doing it in order. And when somebody pays, I put them into a tab on my Excel sheet. And when I finish the video, I move it into another tab. So it's kind of like a free workflow with Excel. But you got to have some kind of tracking system, because when you start doing business, you have to have some kind of workflow management process. Because if you don't, guess what? You're going to have crap slip through the cracks, and you're going to make a lot of mistakes. People are going to pay you, and you're going to not do stuff, and you're going to look like a freaking idiot. Okay. So that's a couple ways you can make money, but you got to have the infrastructure in place. I would say you probably want Dropbox. You eventually want to form, once you start making money, to avoid lawsuits, you want to form an LLC. Then you can get tax deductions. We'll talk about that in a second. You want to form an LLC. You want to get some kind of media insurance. Or if you're like doing stuff like I am, you want to get some sort of professional liability insurance. You want to get all that stuff. And here's the big thing. Okay. Open a business checking account and open a business credit card. There is nothing more annoying from an accountant's perspective than having a client that doesn't have a checking account and a credit card that's solely for business. It is the most annoying thing in the world when people give you their bank statements for their regular checking, and you're looking at them and you're like, what's business and what's not? I have no idea. It's very simple. Okay. There's a ton of banks. Blue Vine, they have free business checking accounts. I opened one. It was super easy. And when people pay my PayPal, I transfer the money from my business PayPal to my business checking account. So when I'm reconciling, when I'm doing the accounting, bookkeeping for my business, I know everything that touches that bank account is business. Money coming in, probably income. Net of fees, of course, for PayPal. Money going out, probably to pay credit card expenses. Oh, my business credit card. So I can go to my business credit card and I can reconcile that. And everything on my business credit card is a business expense. So when I'm doing my taxes, I take all that information, I link it into QuickBooks, or I do it in Excel. I mean, I personally use Excel, but eventually I probably need to adopt QuickBooks and stop being lazy. But I put it all in Excel, and then I have it all there ready for my taxes. Have a business checking and saving, especially if you're going to form an LLC. You want to be separate and distinct from your business. You want to have an LLC. You want to have your checking account in the business's name. You want to operate as a business. Separate you from your business. Because if you ever get sued, you don't want people to come after your personal assets, because they can pierce the corporate veil, is what they call it, because you're mixing your personal and business. Keep everything separate. I'm telling you, it makes a huge difference. Now, obviously, if you have 1,000 subs and you get like $20 of ad revenue, okay, maybe you don't need a business checking account. Maybe you don't need a business credit card. But guess what? When you got all this income coming in, you got to get good at track, because it is so easy to skip income, which you have to report. The money you paid me for this video, I'm reporting on my taxes. And it's also easy to skip expenses, which are also important, because you can deduct ordinary and necessary business expenses on your tax return. Do you use StreamYard? Well, I would say if you use it for business purposes, you probably can deduct it on your tax return. I'm not going to say you 100% can, because everybody's situation is different. Business liability insurance. Yeah, you can deduct it. Do you have a home office that is used exclusively for business purposes? Yes, you probably can deduct the home office on your tax return, which is a pretty big deduction, okay? There's all sorts of stuff you can deduct if you're actually using it for business. Not don't be a freaking scammer. Oh, just deduct everything, bro. Duh, 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 duh. You can deduct a lot of stuff on your tax return. You just got to make sure, talk to somebody that understands your tax situation. Don't be a freaking clown and like deduct your whole house. Oh, my whole house is for business. I remember watching Alpha Status Stocks. They were like, oh, I'm in my living room and I film videos in my living room once or twice, and that means I can deduct my living room. That is not regular and exclusive use. Okay, no, you use your living room for other things than business. You disgusting fat-faced scammer. Yeah, that's right. I'm talking to you, Alpha Status Stunks. Okay, but you got to be careful with that stuff. But my tax return, like I've paid people for thumbnails. I deducted that. I paid StreamYard. I deducted that. I pay for Google Workspace, and I use that for conferencing. So let's say you want to have a business where you're pulling people out of YouTube and you're meeting them. Well, with the Google Workspace, I can set up unlimited video conferences. I can send people calendar invites. So if somebody wants to meet me to learn accounting, I send them a calendar invite with the video link. They don't have to download anything. They click the freaking link and boom, they're in the video with me. And I'm like, hey, I'm literally sitting right here like I am right now. And we do whatever we have to do. Okay. So that's some stuff you can do. Now getting into the tax portion of it. So people like make taxes too complicated, and it's really annoying because people try to like just be freaking scammers, and it pisses me off. I hate when people scam in taxes. It pisses me off to no end. But when you first start your business, okay, this is called a Schedule C. Schedule C, okay, profit and loss from a business. If you are just a normal person and you just start a business and you're by yourself, you're not in a partnership, you're just by yourself, and you have a business, you got to put your stuff here on Schedule C, at least if you want to deduct expenses. If you don't want to deduct any expenses, you can just put it as other income. But you basically want to put any business on here on your Schedule C. If you have a rental property, though, obviously that's Schedule E. There's other things. But specifically for like a YouTube business, for example, your income is going to go here under gross receipts, and you're going to deduct all your expenses down here. You can deduct advertising, car and truck. Yeah, good luck with that one. Commissions and fees. There's all sorts of stuff. Depreciation, if you buy any kind of business equipment, keep the receipts. When you have a Dropbox or whatever thing you use, every time you buy something, keep the receipt, or at minimum, at least charge it to your business credit card and track it so you know to deduct it because it's used for your business. But yeah, depreciation, section 179, that's where you can deduct 100% of an asset's value. There's limits to it. You can't take 179 if it results in a loss, stuff like that. There's bonus depreciation, which is starting to phase out. Now you can only bonus depreciate 80%. Then you have to use makers for the rest. But there's basically you can deduct a lot of stuff, and you can deduct basically almost 100% of most stuff. So that's something to keep in mind. Okay, not your home office. Don't be a clown. But insurance, other than health, I mean, there's all sorts of stuff you can deduct on here. Legal and professional. If you pay a CPA to do your taxes, yeah, that's a business expense. That's right. If a CPA is preparing your Schedule C, yeah, you can deduct it. Okay. Talk to them about your allocation, whatever. Office expense, if you actually have a home office. This is like paper, pens, stuff like that. Pension and profit sharing plans. But if you actually set up something like that. But basically, like you can deduct a lot of stuff, okay? But don't be a scammer. And on top of that, you can actually, the home office is calculated. Well, it's calculated on a separate form, but it flows into here. So you can deduct your home office, and you can actually take a pretty significant expense because you can allocate a portion of your interest and a portion of your depreciate. You can depreciate your home. You can do all sorts of stuff, and that flows into your Schedule C. Now, here's a common thing that I hear all the time. You need to form an LLC so you can deduct your expenses. You don't need to have an LLC to deduct ordinary and necessary business expenses. I have an LLC. It's called Strongman CPA LLC. Guess how long I've had an LLC? Maybe a couple months. And I was definitely deducting expenses for my business without having an LLC. You don't need an LLC. I mean, you should have one eventually for like legal protections, but that's all it's there. An LLC, you just register, you register with your state, and it's basically a legal shield that separates you from your personal assets. That's what an LLC is, okay? But when you're just have a business, let's say you go cut grass and people pay you, you can deduct expenses as long as they're ordinary and necessary. 100%. You don't need an LLC. I hate hearing that, okay? That's so stupid. But when you first start off, you're probably going to be, if you're by yourself, you're not in a partnership, you're going to be filling out a Schedule C. And what happens with a Schedule C? Well, you calculate your profit and loss, and then your profit and loss flows to Schedule 1, and then from Schedule 1, it flows into your Form 1040. So your business profit and loss actually flows into your personal tax return right here on line 8. It'll show up on here on line 8 with other things. Now, when you're in a business, you're going to owe federal tax, unless like your standard deduction is more than your business profit or whatever, and you don't have any other income. But generally, you're going to owe federal tax if you have another job and you make enough to actually pay taxes. And you're definitely going to owe self-employment tax. Well, what's self-employment tax, Strongman? Self-employment tax is 15.3% of your business profit. If you have a profit from your business, that profit gets put on a form called Schedule SE, self-employed. On that form, there's a bunch of calculations. Like you take like 92.35% times your business profit, and then that's the amount that you multiply by 15.5%, and then half of that is actually half of your self-employment tax is deductible on your tax return, and there's all sorts of garbage in there. But basically, think about it this way: 15.3% of your profit, roughly, is going to be taxed, and you get some deductions, but whatever. Talk to your CPA. But you're going to have to owe self-employment tax, and you're going to have to make quarterly estimated payments. That's right. So when you start a business and you start making money, you need to have some kind of tax planning. What is tax planning? Basically, what a CPA does is they pretend to do a tax return. So let's say we're in 2023. It's 2023 right now. Obviously. Duh. I'm live if you didn't know. A CPA will basically say, okay, I'm going to figure out roughly how much you're going to make through all of 2023. I'm going to do basically a mock tax return, and I'm going to know how much money you're going to owe. And I'm going to make sure that you're paying enough in quarterly payments to where you're actually not going to get penalized by the IRS. Because if you don't make enough quarterly payment, you don't make enough payments throughout the year, you get penalized, okay? And there's all sorts of rules that go into that. But if you have a business, yeah, you don't just keep your income, okay? You got to pay taxes. Even if you don't have a federal tax, you can still have self-employment tax because that flows in. It skips the standard deduction and all that crap. Your self-employment tax comes in down here in this part. So you can still have self-employment tax, or you will have self-employment tax if you have a profit. Other taxes, including self-employment tax from Schedule 2, line 21. Very important that you're calculating that, okay? So yeah, you should probably get a CPA. Don't be cheap. This stuff is not easy. This tax is the most ludicrously complex thing, okay? But this is basically you, standard business by yourself. You're just starting, Schedule C. Me, Strongman CPA LLC, I do a Schedule C. What about an S corporation, Strongman? I don't make enough from my business to be an S corporation. But eventually, there is a way to save yourself money on self-employment tax. But it comes with some additional costs. So let's say you're making $500,000 from your business. It's $500,000 of profit. You put that in your self-employment tax. I mean, Social Security eventually caps out, but Medicare doesn't. You're going to get all these freaking taxes. And you're like, man, I don't want to pay self-employment tax. I just don't want to pay taxes but I still want my Social Security when I retire. Yeah, because the young people can pay for that. Well, you can actually form an S corporation. So how do you do it? Well, you have to have an LLC. You form an LLC, and then you just literally send in a form to the IRS. Have your CPA do it because they can make sure that you're, they can tell you when you have to do it to make sure that it covers you for the full year. Because if you don't get it in time and you do a late election and they don't accept it, you're gonna have to wait till the next year. But basically, all you do is you send a form to the IRS saying, I want to be taxed as an S corporation. Why would you do that? Well, you're making more money. You're making a decent chunk of change, which I'm not at that point yet because there's downsides to it. And you want to reduce your self-employment tax. So here's basically how an S corporation works. An S corporation, you don't use a Schedule C anymore. You're done. This is done. Okay, now you're an S corporation. So instead of you filling out Schedule C, you're going to fill out Form 1120S, a U.S. income tax return for an S corporation. What is this? Well, basically, you are now a corporation. You file Form 2553. That's electing to become an S corporation. And you get taxed. Oh, wait, you don't get taxed as an S corporation. That's cool, isn't it? So what happens with an S corp is you calculate your profit and loss for your business, but then your profit, your business profit, flows through to your personal tax return. The S corporation is not taxed. It is not taxed. You, the shareholder, are taxed. The money flows through to you. You could be one person and have an S corporation. You could have two people in an S corp. There's a limit. I think there's like 100 people is like the max you can have and whatever. But basically, you by yourself can be an S corporation, or you could form an S corporation. You can be the sole shareholder of the S corporation. But you form this with your CPA. Don't be an idiot. Don't be cheap. You calculate your profit and loss for your business, and then your profit flows through to your tax return. Now, let's go and see how exactly that works. So we'll go up here first. Okay, so this is the first page of the 1120S. And you can see you have your it looks kind of like a Schedule C. You got all your expenses and stuff like that, depreciation, blah, 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 blah. And what you do is you calculate your ordinary business income and loss. That's right here on Form 21. Now, you notice there's nothing here about, I guess there's some weird, crazy ways that an S corporation can pay taxes. I've never seen that in my crazy experience. But basically, you have ordinary business income, and then that flows through to this form called Schedule K. Schedule K, line 1, you put your business profit and loss there. What is Schedule K? It's a way to divide the income of the S corporation to be distributed to the shareholders. Basically, all the money flows through. The S corporation does not get taxed. And you'll get, as a shareholder, if you're the only shareholder, you get a Form K1. So think about it this way. And there's all sorts of, you can do your balance sheet, you can do your net income for books and reconcile it to net income for tax. You can do there's all sorts of crap you have to do for an S corporation return. Good luck doing this by yourself, by the way. Now, here's the problem with the S corporation, okay? It comes with some additional costs. When you do a Schedule C, it's just part of your tax return. You could have, it's one tax return. You put your wages on there from your wagey job. You put your interest, your dividends. All that is going to be on your 1040. And then you attach Schedule C as an additional attachment to your Form 1040. You're not doing a separate return. With the 1120S, this is a separate return. So you're going to be charged by your CPA. And it's going to be $1,000 or more. I would charge a lot of money, basically. But you're going to pay a lot of money. I would say minimum $1,000 just to get this filed, okay? Just to get your Form K1. But that's not the only thing. The whole purpose of forming an S corporation really is to save yourself self-employment tax. How does that work? The earnings of the S corporation are not subject to self-employment tax. So if you just put all your profits on the S corporation, you don't have to pay self-employment tax, right? This ordinary business profit and loss, you don't pay self-employment tax on that. So why would you do a Schedule C if you got to pay self-employment tax on the profits? Why not just put all your money in an S corporation? Well, the IRS makes you pay yourself, you as the owner, what's called reasonable compensation. You have to pay yourself a salary from your S corporation that basically represents the value that you're putting into the business. if you are, let's say you have an S corporation and you're, I don't know, your S corporation is YouTube. Well, the value of all your work, you're basically paying yourself what you would pay somebody else to do the things that you do. That's basically the definition of reasonable compensation. So you have to pay yourself a salary, okay? And if you don't do that, the IRS is going to eventually come for your butt. Why? Because they know you're not paying yourself a salary, or you're paying yourself a clownish salary, super low, so you can maximize not paying self-employment tax. But guess what? If you're doing it right and you're paying yourself a salary, your salary is subject to self-employment tax. Well, not self-employment tax, but payroll taxes, which is basically self-employment tax. So on your salary, just imagine you're basically paying what you would from a Schedule C, because you pay the employer portion and the employee portion, because you are the employer, your corporation is the employer. So now you have payroll tax expense and you have salary expense. And then from your salary, you're withholding Social Security and Medicare, which is payroll taxes. But basically, if you're making a ton of money and it's inside an S corporation and you pay yourself a legitimate, carefully thought out, reasonable compensation, your paycheck gets taxed and you owe payroll taxes on it, which, by the way, that's expensive because you also have to now run payroll. You got to sign up for Gusto or something, and that they charge you money. Every time you pay yourself, they charge you money. Now you got to deal with payroll. Now you got to deal with payroll taxes. You got to remit it to the proper places. You have to do withholdings. There's all sorts of garbage that goes into this, okay? It's a lot of overhead. There's more overhead. You're paying your CPA. You got to deal with payroll. You got to figure out what your reasonable compensation is, and you're saving yourself payroll taxes. So I'm not going to do this, okay? Maybe next year I might do an S election, okay, if my income keeps going up. But if I do that, I'm going to have to pay myself a salary from my corporation, which is a pain in the butt, okay? Right now, like, I don't make enough, or I'd rather just put it on Schedule C and be done with it. I don't want to deal with payroll. I don't want to deal with all that garbage. But I could do my own tax return. Most of you, if you're a business owner, you can't. Or if you do, you're going to screw it up. I guarantee you're going to do it. Oh, it's easy. Just do your own taxes, bro. It's not easy. Yeah, okay. So that's basically an S corporate. Okay, so this is like, if you're just by yourself, I mean, you're either going to be a sole proprietor, LLC, you're going to do Schedule C, or you could be an S corporation. And you could be a C corporation. I mean, you could be a C corporation, which is that corporation is taxed at 21%, regardless of what type of income it is. You could be a C corporation too, technically. I mean, I guess people do that, but generally, like, what I've seen is most people eventually become S corporations. If, like, they have a YouTube business, and eventually I will become an S corporation. Like, if the money keeps picking up, I'm going to be an S corporation. So that's kind of the plan there. But basically, that's some of the big considerations. There's a lot that goes into it. You need to hire a CPA. You need to keep your business expenses separate. You need to, before you even do that, figure out what you're going to do. Like, if you plan all this stuff, but you don't do YouTube videos, there's no point. Okay, I've been doing this for like 2.5 years more, and I'm finally at the point where I'm making $1,000 here, $2,000 a month. Like, but it's not like a huge business. It takes time, okay? But now that I'm actually making the money, now I'm building my processes, okay? I mean, you should be prepared for that, but you shouldn't obsess over S corporations if you have 2 subscribers. That's not worth your time, okay? Focus on growing your channel. Experiment. Work on thumbnails. Maybe you pay somebody for thumbnails. Improve your content. Get better over time. And then when you start to make money, then you can start talking about estimated taxes, and eventually you can start talking about electing to become an S corporation. And, oh, did I mention you also have to pay estimated payments to your state if your state has income tax as well. And if you're in California, they actually tax, the California has an S corporation tax. What a bunch of freaking clowns. Oh, my God. Okay, so that's kind of the rundown. With an S corporation, you get your K1, and then it flows through on Schedule E, income or loss from partnerships, S corporation. It all ends up back on your Form 1040. Now, here's the crazy thing. When you pay yourself a wage from your corporation, from your S corp, it's a deduction on your S corporation return. But guess what? You get a W-2 and you got to put it on your return, which is another thing you got to file, by the way. You got to file your W-2 or your W-3. But that your pay actually goes on here. So if you pay yourself from your S corporation, it's not just a free deduction. It goes into your tax return. So if you pay yourself 50 grand, it comes into your tax return as 50 grand of income. So it's not like, oh, you can just deduct your income and then that's how you S corporation. Blah, 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 blah. It doesn't work like that. Okay. You need hire. Trust me. You got to prepare for a lot of expenses, but you can run a very profitable YouTube channel. It's very possible. Mine's like ultra profitable, but I'm not the biggest YouTuber, obviously. I'd have to wear a shirt for that. Daddy Dong Man, can't wait to see your face. Here I am. Woo! Thanks, strong man. You're welcome there, handsome. Dividends. Tesla. I love dividends. Will you sell a $10,000 course on how to start a YouTube channel? I should do that. I should. You get one sale. That's $10,000. Woo, baby. Your camera could use an upgrade, to be honest. That's true. I agree. Tesla PE ratios. Oh, my God. Tesla, dude. I don't even know what to say anymore, man. It's just, I hate investing. I hate the whole market. It's annoying. By the way, the only reason I found you is because I searched for Meet Kevin when he quit posting for a while. SEO is a thing. Oh, trust me, that works too. Yeah, you can talk about bigger YouTubers. It works. Go to YOLO into real. You should put your entire life savings into it. Starting out, how many videos a week should you be putting out? Well, it really depends on the type of your content. If you're like high volume content, low quality, high volume, just do what you think is reasonable without becoming obsessed. Okay, it'll come with time, but you don't want to sit there and just think all day about YouTube. Okay, I don't think about YouTube. Well, I did for a while, and I was like, this is stupid. I come home, hang out with my kids. If I have time to do a video, I'll make a video. And on the weekends, I have time to make more videos if I'm bored. There's no like set amount. But if you're focused on high quality content, you're just naturally not going to pump out as many videos. Whereas this, I turn on a camera and I talk. That's it. So it really depends on your what you want. The GOAT of YouTube finance. Thank you very much. So should I? I don't think YouTube would like that. Let's see. Buy the most expensive, mentor group. Yeah. Kevin O'Leary made 10 million FTX money. Oh my God. The mall DD was funny. I recommend it. Yeah, it's just hard for me to do that because I'm always have kids dragging around. It's hard. How was there a business before computers? I don't know. I don't know how the world worked without computers. You need to do another video on Crypto Griffer you called out recently. Which one? Watching from Japan. Thanks, Strong. I'm buying Arc, Tattooed Chef, Planet 13, and Palantir. You're about to be a very rich man. Graham's cars are worth deduction because they were props in the. No, they're not. That's not how that works. You just deduct anything, bro. Yeah, so you get audited, and then you get your return. You have to amend your return and get penalties and taxes and interest, and so many scammers out there. Freaking hate it. How to become famous on YouTube? Be diligent in your bookkeeping. That's how you become famous, but you need to start thinking about that when you start making money. No profits mean infinite carry forward losses, or means I can deduct a sports car from my real jobs. Yeah, oh yeah, you could totally do that, man. Oh yeah, just deduct your sports car. Delete all the defamatory videos you have about Stathis. 1, not defamatory. 2, no. Wow, butt pussy came back. He did. He's desperate. It's definitely Mike. Can't believe I'm funding some guy's VT addiction. LOL. Hey, all your money that you guys send me, I've been hammering VT. Woo, baby. Does your business also hold VT? It does not. Strongman CPA LLC does not hold VT. That'd be kind of a weird thing to put in your business because let's say you have like a C corporation, right? And you put it in your C corporation. Well, if you put it in your C corporation, you pay 21% tax no matter what. So I'm not sure you'd want to do that. And then if you have it inside an S corporation, it just flows through to your personal tax return anyway. So it doesn't matter. Put a shirt on, delete all the family-friendly videos. You have the best day. Okay, BP, I'll do that right now. All right, guys, that's it. I'm going to go watch some weird European Netflix show. Some weirdo crap. But yeah, if you want a personalized video, there'll be a pinned comment, or you can just look at my old videos, or look in the description of my videos. That's how you pay. You pay me money, I'll make you a personalized video. All right, that's it. That's how you start a YouTube business. Have a wonderful day. Cheers.